Want to actually understand how your business is doing, not just guess? It starts with two key reports, your profit and loss and your balance sheet. I'm Jenny, and in this video, I'll show you how to pull and read these reports in QuickBooks Online, even if you're not a numbers person, so you can make smarter decisions faster. Right now, we're in the sample company, Craig's Design and Landscaping. What we need to make sure is done before we start pulling reports is we need to make sure that we have categorized all of our transactions for the month we're pulling transactions for. So I'm going to go to bank transactions again. I can see right here I do not have any transactions for August, which right now I am in real time in the month of September. So I want to pull the reports for August because that is the last month that has been completed. I see there's no August transactions in here. There's none in here. And there are none in here. The next thing I want to make sure is done is all of my reconciliations. Because this is the sample company, I actually haven't done the reconciliations, but for the purpose of this video, we're going to pretend like I have. Now that I have checked out my transactions, I have reconciled all of these accounts, I am going to go into reports. We are going to be pulling standard reports today. There are two reports that most business owners should get pretty familiar with, and those are the profit and loss and the balance sheet. Generally, when you start your new QuickBooks account, these two will be up here at top as your favorites. They are automatically selected as favorites by selecting this star. If I were to click on this now, it would send it back down. We're going to start by looking at the profit and loss. Right now, I want to look at the month of August. There's a couple different ways I can do this. I can just change my from and to dates, or I can go to this report period area and I can just select last month since it was last calendar month. When we come in and look at this report, we see a couple different things. The accounts are listed here on the left-hand side, while the totals that happened in that time period for this one, August 2025, are on this right-hand side. We start at the top with income accounts. So you can see there's two income accounts here, design income and discounts given. There are job materials, so this would be like a cost of goods sold category. These are things that they bought specifically for their income. There's also other services that they offer here, and there's a separate cost of goods sold here that belongs with these services. After we get to this line that says gross profit, we start going into our expenses for each month. That's where any type of expense would be for your business other than these things that are directly related to jobs. You can see here they have advertising, they have fuel, equipment rental, insurance. There's also a job materials section down here, legal and professional fees, etc. And then at the bottom of this area, we get a total for expenses. Down here, there are miscellaneous income, and other expenses, different things that cost the business money or miscellaneous income. The things that show up down here generally are things that are not like a normal part of doing business. A good example for this is a lot of my clients pay sales tax. If you pay your sales tax in our state before the due date, you get a discount. They owe a certain amount to sales tax and they're getting a discount, so that's income that they wouldn't have normally had, so that would show up in this other income category. You see the total for those here. And then you can see the net income. This is the amount that was made in the time period with all your income and all of your expenses taken out of it. So if we look, this is our bottom line for the month of August. If we take into account all the money that this company earned and all of the expenses that happened during that time frame, they still have made $1,392.44. I'm actually going to show you another report that's a spin-off of the profit and loss that really helps business owners use these reports to make decisions. I'm going to go back to standard reports. And this report that I'm going to pull is one of my favorites. This really helps me go through client financials and make sure things look good. I like to pull this profit and loss by month report. And actually, because I use this one every single month, I go ahead and star this when I get a new client. So it shows up in my favorites. What this report shows is a comparison month over month. As you can see right here, there is not very much information in this company before the month of May. There's one transaction here in April. My best guess is either this business started in April or they haven't really been keeping very good books. I'm just going to pull May through August to show you this example, just so we can see this a little bit bigger here. And we're going to get rid of September because that month has not been completed yet. We see all of the income that's come in, all of the expenses that have went out, month by month. On the right hand side here, we can see the totals, but you can see each individual month. Why this report is so helpful is because it helps you compare things that shouldn't change a ton from month to month. When a business is getting started, the huge differences in income and expenses are common, but there are some things that are going to be similar month over month. Some of those things would be your utilities. If you're paying someone for monthly services, you can kind of see those things month over month. For instance, bookkeeper. This is a bookkeeping service that you're using. You're probably paying that person on a month-to-month basis. It looks like they've only paid this person in July. So it might be different for them, but this would be something to check into. You can kind of go through these different things and look at them. Something else that I really like about these reports in QuickBooks is you can actually click on any of these numbers and see what is combined to make that amount. This one really I want to check into, especially since it's a miscellaneous expense. This is something that, generally speaking, your accountant or your bookkeeper, your tax preparer is going to need to know what this is. We can click on this $2,666 and see what this is. It looks like we're going to have to ask our client some information. We can kind of make assumptions based on where these were being paid to, but the fact that they put them in miscellaneous kind of makes us need to ask them a few more questions. Since this one was paid to an insurance agency, it's probably some sort of insurance, but we should probably find out which kind. This Tim Philip Masonry, they were probably paying this person to do some work for them. Maybe it was contract work. Maybe they bought something from them. We're going to need to ask a little bit about this, but at least we can see that it was two separate places. We can see the dates that they were done on, as well as the amounts. So it gives us a lot more information than just the $2,666. So those are some really cool features that these reports have. Some things we really, really want to look at on the profit and loss report are our total income. We want to look at our gross profit right here and make sure that this make sense for what has actually happened. We want to look and see if it's increasing, decreasing, what happened that month that made it do that. We want to compare our expenses month over month. Are we seeing any unusual spikes? Did we spend a lot more money in a certain category? Why was that? Does it make sense that we did that? And then we want to make sure that we are looking at this net income. We want to make sure that we are staying positive, because we will see a negative amount down here if we spent more in that particular month than we made. We want to make sure we are consistently profitable. A lot of new businesses do not begin their journey as profitable, and that's okay. That's stuff that happens when you start a new business. But if you're not eventually getting to a point where you are profitable, that business is not going to be sustainable. Another thing we want to look at is cost of goods sold. We want to make sure that those are proportional to incomes. When I'm looking at this, I'm seeing $405 in cost of goods sold for these services right here. I'm looking at almost $1,500, a little bit under that, in income from these, and $405 of that is something I had to purchase for that. There's a couple things that is kind of high, but this might be something that I had to purchase that's going to last longer than just this month. And that's kind of something I need to be keeping in the back of my mind as well. But we want to kind of look at that just to make sure that the things that we're purchasing are not actually costing more or not a huge part of our income. Now, again, this would be something that would be concerning. The amount that we're spending on job materials and labor for this portion is more. That would be something else we would need to look at. Did we just not get paid for the particular thing that we were doing yet? Are we going to be paid for it in the future? Things we need to think about while we're looking at this report. Another report that we want to pull every month just to look at and make sure it looks good is the balance sheet. We're going to go back to our standard reports. What this report shows us is a snapshot. I am going to make sure that I just select August for this one. This report shows us our assets, our liabilities, and our equity. Assets are things that we can expect to either use the money from, be useful to us for a long time, or things we're expecting to get paid for. You look at this, you can see the assets. We have current assets up here. Bank accounts are included in here. Accounts receivable, which is what people owe you. Our inventory is in here. Undeposited funds. This can be kind of a tricky one. What that basically means is we had, at the end of August, been paid $2,062.52, but it had not yet been deposited into our bank. Either they had paid through our electric system and it was still waiting to be deposited, or they paid us checks towards the end of the month and we didn't get them deposited till the beginning of September. We also have things like our work truck here. We have the original cost for that. We can see our total for assets is $24,335.41. Next are our liabilities. Things that are in here. Accounts payable. That is what you owe your vendors. So if you have put any bills in here from a vendor and you owe them money, that's going to show up here. Credit cards are going to show up here. Any other type of liabilities that you owe, it looks like they have certain things that they have to pay to the state. So they're recording those here because sometimes you are required as a business to hold on to funds and later give them to your state or federal entity. A good example of that is sales tax. Sales tax is something you have to hold on to as a business in the state, and you have to pay it on a quarterly basis, on a monthly basis, depending on what the state requires of you. There's also a loan in here. Long-term liabilities. Notes payables. A note payable and a loan payable are pretty much the same thing. The reason that this one's up here in other current liabilities is because this one is going to be paid off quickly. This one would be more of a long-term loan. Now down here we get to our equity section. Equity is made up of a couple of different things. This would be money you have put into the business, money you have taken out of the business. Retained earnings are the amount that stays in the business year over year. And then your net income also shows up in this area. When you look at this one, there is an opening balance equity, which to me as a bookkeeper, this is a red flag. I want to check out what this is. And generally speaking, this needs to not be in here. It means something is wrong. So if you're seeing an open balance equity in your balance sheet, you might want to take a look at that. Every once in a while, it is used by bookkeepers and accountants to kind of fix a previous year when they're starting fresh books. So there will be something in there, but generally speaking, there should not be anything in opening balance equity. This would definitely be something I would take a deeper dive into. Some things you want to look for on this report to make sure that everything looks good and you can see the health of your business. You want to make sure that your bank accounts are correct. The way that you're doing that is through your reconciliation. You can make sure that these amounts are the same as that number. There might be a couple different reasons that those might be off, but generally speaking, where you reconcile is the amount that these should equal. You also really want to look into your accounts receivable. This is really handy because I can click on this and see what is in here. There's also a report that I can pull for accounts receivable that's really nice. There's a couple of them actually, but I want to make sure my clients are paying me on time. Another thing I want to look at is accounts payable. Do I owe people a ton of money for things that are short term? I want to make sure that I'm paying these on time. When I pay my accounts payable on time, I am more likely to be able to set up accounts with other vendors because they do generally ask for references when you're setting up with vendors. We also want to look at credit card and loan balances. Is this correct? Do I still owe $4,000 on this loan? Have I made any payments to them? And I also want to check my owner's equity, which this account does not have any. But if I have been taking draws out of my business, I want to make sure that they're labeled correctly. I want to make sure that they are actually saying they're coming to me. If I have things in there that weren't actually coming to me, I want to make sure they get recategorized correctly. I just want to look through all this and make sure everything looks good. Did I purchase another asset during this time frame? Do I need to add something? Did I sell this truck? Those are all things I need to look at in this report. Running your P&L and balance sheet monthly gives you real insight into your revenue, expenses, debt, and cash flow. You don't need to be an accountant. You just need to check in regularly. Like this video if it helped, subscribe for more bookkeeping tips, and grab my free financial report checklist in the description below. Thanks. Bye.